Welcome back. The last 3 times Lance Ley has been on this show, he's been predicting what has actually happened over the last few days on the market. So is there more bad news to come? And is there a U-turn in sight? And he'll be joined by Jason See, Group Managing Director at the AJ Mason Group, who is an active property investor in Hong Kong and mainland of China, and he will give us his insights on our most important trading partner, particularly when it comes to property. Okay, guys, thanks very much for joining us on the program.
My pleasure, Peter. Thank you for having us.
Okay, let's start off. I will talk to Lance first and I'll go to you after that, Jason. Now, we always look at what you said last time, so let's go to that package.
Great, let's do that.
Okay.
I think we need to consolidate. Having gone up 26% and now sitting at basically 23%, you know, in the medium...
It's something we usually need, but for some reason it didn't play. Lance, they'll just have to trust me. You actually did suggest what we're seeing now was going to happen.
Well, thank you very much, Peter, for clarifying that.
Yeah.
You know, I mean, what was said in the last show was that we'd come back to a S level. It was 5,116. At the time, that was 3.9% lower. And today, when I actually did the chart, I mean, we fell below this mark, but it was 5,112. This is the ASX 200 index. So we basically fell just over 4%, Peter, since the last show, which was in the beginning of January.
But you were seeing this in November and December. You know, I always love you to be optimistic, but you just couldn't, even for your old mate, you couldn't find reason. You had a fear that the market had an inclination to fall.
And you know what? I think that's right, Peter. And you know, we've got a little bit more falling to go, unfortunately, I think.
Okay, well, that's, I'm sure, is going to be the business of tonight's charts. So let's go to your first chart. And as we're waiting for it to come up, you start telling us what we're going to see.
Well, we're going to see the ASX 200. There we have it. So J was where January, I came on the show at 6th of January. S is basically where we've fallen to.
Little s or big S?
Sorry, the little s on the far right, below the yellow sweeping line. That represents a fall of 3.9%, which is basically where I said it would fall to. I think we're going to fall back to where the October line is there now. That's really only 1.9% lower.
And what's that level, Lance?
That is 5,013, Peter.
So you don't see us going through the 5,000 mark on this one?
You know what? I think there is a good possibility we will.
I guess it'll depend on the kind of negativity we get coming out of Wall Street as well.
Correct. And, you know, the S mark below that, which is basically 4,864...
Let's not talk about that, Lance. I don't want to go there.
Well, you know, Peter, when you look at where we are now at 5,112, we're still up 18% in 15 months. Now, if we fall back... If we fall back to that lower S mark... all we're doing is taking off 5% from here, and we're still going to be up 13%. That's still very good.
If you add dividends as well, we're probably talking 18%.
Precisely.
Okay, good point. All right, let's go to the next chart. And I guess it's going to be the S&P 500.
Yeah.
Okay, are we seeing anything unusual about that, Lance?
Well, Peter, the S&P 500, as you can see there, is that I've titled this chart "Pull Back Here." There's more to come.
And that yellow line, explain to our viewers what the yellow line stands for.
The sweeping yellow line on the bottom is the 200-day moving average. As you know, I look to that quite often. The J is where I was in the January show. And you wouldn't believe it, Peter. I said we were looking at going back to the M mark. The M mark is 1,744. You can see it on that chart. I've spoken about that level again and again on this show. You know where it closed on Friday? 1,741.
Hang on, you still wouldn't believe it. I'd believe it, Lance. It's you, Lance.
Thanks, Peter.
Okay, good. Okay.
Where I think it's going to go now is below that.
So it's going to test the 200-day moving average.
Correct.
Okay.
It's probably going to go another 2.5% lower. I've got that first S at 1,703, and then at one that's even lower again at 1,676, which is 3.7% lower. Now, if you have a look at where where we are at. We were up nearly 40% till December. Now we're come back 14 months later, we're still 30% up. And if this takes it down just a few more percent, well, we're still up 25%.
Yeah, it's a mere bagatelle, really. And these guys, of course, they've passed their old all-time high, so that they can easily come back a bit and keep trading around. The funny part is that we haven't even got near our all-time high, and that's one of the reasons why I suspect this market's still got a fair way to go, but it just might not be in the straight line that I'd like.
I think we've done incredibly well already, Peter, and I think that this is, as I've always said, we're going to consolidate.
Yeah.
This is going to consolidate.
Macquarie calls it the long grind up, and I think they're probably going to be right as well. Let's go to the next chart.
Now, in the next chart that's to come...
It's Shanghai.
Shanghai. This is going to start to lead into why we have my friend here, Jason.
Yeah.
And when I look at here, the Shanghai Composite, last time that I came on the show was a gain marked J. I said that G1, namely the upside scenario, is going to be at risk. And here we are. I said we'd probably trade into the zone where the two parallel lines are, where the S is.
Yep.
Indeed, you can see we've actually done exactly that, but we've had a bounce. I think we're probably going to see softness. This chart has not traded since last Thursday, which is Chinese New Year's Eve in China. They're still not coming back until Friday. Okay, so we've got the whole week before us. I think we're going to test that B line now, which is the bad line, Peter.
Okay, so you don't think S will be tested, you think S will be broken, and B for bad will be the big test on China?
It'll be the big test.
We haven't got a great run of economic data. It hasn't been bad, but it just hasn't been as good as we would like.
You know, I think we need... This was unfortunately coming, and maybe Jason can shed a bit more light on the situation.
For sure. Let's go to your final chart.
So this is Hong Kong, the Hang Seng Index. We're at 21,511 when I did this chart today. And you can see there on the far right, this is it's kind of in a bit of a almost a free fall at the very moment. I think it'll stop at the S level. That first S level is basically 20,573, which is 3.5% more. And the equivalent B level that I'm talking about there, and I put a little b, Peter, being it's just a little bad, not a huge bad. Which is basically...
It's the first time you've introduced a little b into our conversation, Lance.
Well, we want to try and keep it simple here,
that's
Peter.
right, very simple.
So the little b represents a negative of 15% from November, which is, well, you know, it's not good, but it's not awful.
Okay, well, this is a great opportunity to bring Jason in as well. You know, that Hong Kong stock market is now through its 200-day moving average, pretty solidly through it. I'll ask you first and ask Jason for his point of view. Why is Hong Kong experiencing such a sell-off?
Well, as part of this, well, the charts, I don't want to comment too much on the fundamentals.
No, you never do. But do you have a view? This is one of your favourite patches, Hong Kong.
Well, you know, I think this market is experiencing what all other markets have been experiencing, really. We've been topping out over December, January, right?
Yeah.
And just as in the US we saw in the chart earlier, I think it was due for a pullback, right? Whatever those reasons are, and here we are, we're seeing that.
Okay, Jason, you're a senior leader in the Entrepreneurs Organisation. Your business is AJ Mason. You specialise in property development in Hong Kong and mainland China. Has Hong Kong been going through a solid growth phase and the stock market's reflected it, and now it's just coming off the boil a bit because it's had a lot of exuberance?
Yes, Peter, I think you're absolutely right there. I'm not surprised to see that the stock market has dropped because, in fact, the past 6 months, the property market has lost about 15% in value. So according to Lance's chart, the financial markets has dropped about 8%. And in my view, I think there might be another close to a 7% to see as a downtrend.
Okay. Now, we know that China is like a number of things. They love going out to eat. They love buying expensive products in French stores and things like that. They love gold and they love property. And you specialise in property. And we've heard lots of talk around China and a property bubble. You've got some investments going in China.
Definitely.
Are you worried about a bubble in China?
Peter, I'm not worried at all about a bubble. I think I like to look at the property market and compare it to like a hot air balloon. So imagine that there are all these hot air balloons ascending to different heights in different major cities. And when it gets too high, the government will let some hot air out. And like a property market, it will go down a little bit lower.
Yeah.
So it's very controlled.
How do they do that?
They do that by controlling the liquidity, the interest rates, and of course they limit the loans to the developers.
Yeah. So the ability of, is it the government itself or is it the People's Bank of China, the central bank? Is it the main player in controlling your exuberance and enthusiasm?
It's not actually the Bank of China, but it's actually the government itself controlling all the major banks in China.
Okay. Now, we've seen some data recently on China, and it wasn't as good as people expected, but it seemed to me it wasn't all that bad. What's your interpretation? Obviously, you're taking a risk in building properties in China. You wouldn't be doing it if you had a negative view on the Chinese economy, I presume.
Of course. Right now, I would say that we are now in a period that what I would call the Olympic period of prosperity. And this period lasts about a decade. And it started since 2008 when Beijing had the Olympics. So now we're in the middle of this phase, which we still have another 5 more years to go. So I'm actually very bullish.
Okay. Well, when they talk about there's been an excessive amount of property and they talk about ghost towns, usually American documentaries talk about ghost towns. Are there many ghost towns in China?
There are actually not a lot of ghost towns in China. I think that is just a description of new projects in new economic zones, which obviously the construction period is very shortened to try to build up as quickly as possible.
Yeah.
So to the naked eye, it might look like a ghost town, but in fact it's not. It's all demand being taken up.
Okay, so in terms of looking at this Chinese economy, are you expecting to see it pick up in the second half of this year?
Definitely so, because this is the year of the horse,
That's
you know.
right. So, yeah.
And as you know, in a horse, you always have to hold it back a little bit before you can allow it to finish off in a blazing finish.
Yeah,
So,
and clearly we're talking about a long history and culture of superstition around these sorts of things. But does the Chinese population react positively to the image of the Year of the Horse?
yes, they do.
Yeah.
Yes,
And so as a consequence, you expect consumers to spend and businesses to spend.
definitely so.
Okay, quite fascinating. Lance, is there anything else you'd like to say? Because one of the things I threw in the introduction was, is there a U-turn in sight? Now, Jason has implied he thinks that the Chinese economy will come good. That will be a real positive for the Australian economy and the Australian stock market. Are the charts telling you that there's a U-turn out there waiting to happen, or is it history that you expect it to eventually happen once it gets down to those B levels you're talking about?
Yeah, look, those B levels are very important, Peter. And unfortunately, as you know, for me, I don't like to look too far ahead. I have a gut feeling, though, Peter, and that is that I think that the Chinese government will be able to manage their way through, just as Jason said, with respect to the liquidity and manage these bubbles, so-called bubbles, so that we slightly just deflate them a little bit. And then I think the US will also bounce, right? It'll come off, it'll bounce, and then, you know, we'll go sideways this year. And as Jason says, maybe finish the year strong, you know, 10 months from here. But I think for the next few months, we're in for a little bit of softness.
Okay, mate. Well, Lance Lay, Jason C, thanks for joining us on the program.
Thank you.
Okay, so that was Lance Lay and Jason C. Lance, of course, with his wonderful charts, and Jason giving us a more positive view on China. Thank God for that. After the break, after a particularly negative day, hopefully we'll receive some injection of positivity and optimism from George Baburis, Chief Investment Officer at Equity Trustees.